Welcome to Profits Capital. Today I'm going to do a quick video on technical analysis of the GBPUSD, and the date is it's for the week commencing 28th of May 2019. I'm going to cover a few different points. I've been asked by my students to show a little bit of analysis on Fibonacci's, extensions and ABC patterns, and kind of have a bit of a discussion about how we can use those in forward planning our trades, whether it's for profit or whether it's for targets. But obviously before I start, I do have to draw your attention to a quick disclaimer. We're an educational company. We provide mentorship, we provide capital, but we don't provide investment advice. And I would urge you to pause the video at this stage really carefully before moving on. So let's have a look at the charts. The British GBP British pound. Everybody's interested in that at the moment because of the because of the current situation with Brexit and the political machinations of what impact that's going to have on trading the GBPUSD. Let me just remove the strategy for a second, and then we can look at the charts and start from the very beginning in terms of what is going on right now, what has been going on, and what might happen as a result of certainly technical factors. Whenever I look at a trading opportunity or a chart, I always try to go back all the way back to, let's say, weekly charts, because I like to know where my support and my resistance are sitting in the context of where we are with current price. That is always going to be useful to me because, as we all know, support, resistance is very important in trading. And in my other videos, I do go into detail on how I draw these support and resistance lines and the importance of how to respect them and how to use them in your trading decisions. So, just a quick summary. Everybody knows what's happened here. It was the Brexit vote. Remember, these are weekly charts, so we're going back quite some time, back to 2016. And after the big fall, we had some sideways action, recovered with optimism, but that optimism has soon sort of disappeared. And certainly in the last few weeks, with the talks breaking down with Labour and more looking like we're going to have a no-deal Brexit, which has obviously had an impact on the pound. But let's see how the impact is following not only geometry, but also mathematical levels, which technical traders often look at. So I'm just going to start by drawing some Fibonacci's on here just to see if there are any fib levels which we might need to just respect or note down at this current session here. And what we can see here is, in fact, I'm just going to change the settings on my fib tool here just so that I can see them on the right, and that way you'll be able to see the numbers a bit more clearly. So there we go. We can see here that since the big drop and the big retrace we've had, markets are now settling down into this 76.4 fib level at around 1.2613. So we can see the price has been hit a couple of times on this, and this is an obvious level of support. So what I tend to do when I see an important level, particularly on a longer time frame, I'll put a line in at that level, and then I'll remove my fib. In fact, I'll remove my fib and then go to a smaller time frame. Let's go to the small time frame, in this context a daily chart, and we can see our weekly support is here. Weekly support based upon a fib level, and then we can start looking at what are these zigzag doing. And again, on my other videos I talk about a preoccupation of mine is, why did markets turn here, why did they turn here, why did they turn here, and why do they turn here? Understanding supply and demand and reactions to certain price levels is fundamental to your understanding of technical trading. So the first thing I'm going to do is obviously note that prices in the last few days have hit this 1.2600 level for the GBPUSD, and it bounced off quite viciously off there, and now it's looking weak to come back down again. Don't worry about this this scanner here at the side here and these numbers here. I'm going to come on to those a little bit later, where in this video, I'm really going to be just looking at fib levels and then overlaying the strategies to see when we had opportunities to trade and when we should be looking to get out of a trade. So this is the daily charts. At the moment, these are just naked candlesticks. I can see that I'm going to look for levels which might be interesting to us, moving forward. And those of you who had some technical analysis trading experience, you'll know that fib levels, support and resistance are forward-looking rather than backward-looking. A lot of indicators tend to be backward-looking, which are fine in their own context, but I tend to look for things that will give me a much more forward analysis. And just by looking at the charts here, we can see that the markets have come down, retraced, and come down again and found this level here. So let's start putting some fib levels in to see if any of the past fib levels can become useful to us in the future. So we use our Fibonacci tool here, and I'm not going to go into how to use the Fibonacci and where to place them just yet. I have other videos where you'll be able to learn how to use these tools more effectively. So what I've done here, I've looked for my highest point here, and I've looked for the lowest point here as being my zero line. You'll notice I also have a 27.1 level as well, and this is something that I use a lot. And I'm just going to add another level here, which you'll see coincides with our resistance line. So if I just tick that and put minus 50, let's make sure we got it correctly. And you can see here, from this move, and I'm going to just highlight it here, from this point here, and from this point here is where I created my A and B. Top of the fib, bottom of the fib at a 0, 100%. And this is the fib extension going to the 27 level and the 50 level. And you can see the 50 fib level, even on this reaction here, is coinciding with our support line that we put in earlier from our weekly. So you can see how markets are respecting these levels longer term and shorter term. So how do we make use of this? Very often, and again on my video on Fibonacci's, I talk about these important levels here. Everybody really knows about the retracement of 618, and incidentally, I should have picked this up as well. Notice how the market turned exactly at the golden 618 level. I've marked it yellow so everybody can see that. So from this move down here, it retraces the 618, broke through the previous level and settled itself for a few days on the minus 27 fib extension, and then the half extension is where it settled down. And this is where it's now finding its level now. It's hovering over the last few days between these two levels here. So, what is going to happen next? We want, obviously, it's all very interesting drawing these lines, but how do we use these lines to give us some ideas on what our trading ideas should be? So what I'm going to do now is draw another Fibonacci from this level here to the bottom, and I'm going to draw it across here, and we can see here that it gives us a number of levels that we can start looking at to see if the market's going to come. So this is the ABC, so A and B, and it's bounced off not only the 27 level from this and this one, but it's also retraced back to the 2360 level. So it's extraordinary, isn't it, how the markets follow these patterns over and over again. And if they do that and we understand how to use them, we can use them to our advantage moving forward. So what does this tell me? There's one other thing that I want to just mention, is that the premise that markets aren't random, that they do work in sort of mathematical levels. I can demonstrate that again here. I call this the ABC pattern. The ABC pattern is from the top here to the bottom, its reaction back, its retracement if you like, and then often when the markets retrace back to a fib level, very often, I found this many times over, will also extend and go to its same distance from here to here, retraces, went to fib level, and it's found a position here at 2650, which kind of is in the same area as where the market is settling down right now. So you can see here that by drawing a couple of fib levels, a couple of ABC patterns, we're able to understand that the British pound is operating in a very mathematical and geometric way. And if it's doing that, we want to be able to take advantage of that by plotting forward and seeing where potentially the British pound US dollar may go. So based upon this information, obviously we're in a sideways pattern, holding pattern at the moment, because it's very much tied to what's happening politically. We can see here that it's probably going to go into a bit of a range for now, probably bouncing between these two levels here, the 50 extension and this which coincides with the weekly support, and I expect it to go sideways. It's only when the market will break out of this blue box that I've drawn will give us a clear indication, is the market going to continue going down to at least this level here, or is it going to find a retracement back to here? So these are the possibilities, utilizing fibs alone to say to ourselves that the market, if it retraces, we'd be looking at the retracement levels around the 618, around the 3820 level, and we'd be seeing how markets react to these levels if in fact it does retrace. If it does not retrace, and this is a pure continuation of its downward move, we would then be looking at levels where the market will find some support here. You can see here that even at this 27 extension, we have some support just under the 25. In fact, it's about 24.69. So this level is also going to be very important if the markets break down. If it does break down, it will probably find some support at this level here. If the market goes up, and we will watch, and there are trading opportunities which I won't go into this video, where we can take advantage of these levels. We can take advantage of this breakdown onto this level here. So I hope that gives you a little bit of an idea how trading with fib levels, with ABC patterns, with support resistance can really aid your understanding of when these markets are falling. They fall to almost prescribed levels. One thing I'm going to do is I'm going to remove all these tools and show you our strategy that we use. So we don't just use this as part of our trading ideas. What we want to be able to do is use our ProFX runner and ProFX scanner strategy to give us that added indication of, is the market strong or weak. So let's just put that on there now. So we go to our strategies, and don't worry if it starts looking a bit messy. I'm going to get rid of some of these lines in a second, but it's useful for you to see, when do we buy and when do we sell. And what we can see here, and I'm going to just expand this level here, and I am going to remove these lines. Drawing tools to remove. And our strategy is giving us indications on probabilities of if the market's going to continue going down. In fact, we did get a sell signal on the 14th, and we took that sell signal. I won't go into where the stops and targets were, but we fully go into that in greater detail with other videos that we do. So our entry was given to us by this red arrow. The scanner that we use gives us an overall market view on what is happening to other currencies. Are they strong and weak? And I'll just briefly go over if everything is magenta in color, with our proprietary algorithms, is telling us that the CAD SWIFT is weak. If we look at the GBP, we're starting to get a little bit of strength coming in, so this downward move that we've had is running out of steam according to our algorithms. We won't base our trading completely on the algorithms. We use fibs, we use support resistance, and we use other things that will give us confidence in placing the orders. As I mentioned earlier, we do still see a little bit of holding pattern here sideways, and we would really be looking to see if it breaks down across here or goes up. I hope you found that useful. I kind of went through it quite quickly. We do have other videos that go into much more greater detail, and if you want me to analyze other currency pairs for you, please contact us, and I'm happy to go through where we see levels, where we see turning points in the market, which might be useful to you in the future. I hope you enjoyed this video, and I look forward to you watching the next one.